I'm Caroline Hyde. This is Bloomberg Technology. Coming up, tech giants continue to report earnings with Qualcomm out with numbers. The chipmaker beat expectations amid its high-profile court battle with Apple. Plus, the life of an Apple supplier is about to get even tougher. We'll unveil the company's plans to expand its design of components. And a $400 juicer grabbed the interest of high-profile tech investors, but now it's feeling the squeeze. First to our lead, Qualcomm reporting second quarter results that beat analyst expectations and revenue that topped estimates. The company reported earnings of $1.34 per share on revenue of $5.9 billion. Go into my terminal. We'll see that the Bloomberg is showing you, if you type in GIPO on your Qualcomm ticker, there it is, up almost 3 percentage points in after-hours trading. So clearly we are seeing this movement even amid the ongoing court battle with Apple. That was indeed discussed in the earnings report. Joining us now to break all of this down, Anand Srinivasan, who covers Qualcomm for Bloomberg Intelligence. Anand, I mean, fascinating, numbers beating, revenue up about 5%. They're talking up automotive, networking, Internet of Things, but there is a clear Apple effect here. $1 billion of payments, they say, withheld by suppliers?
Absolutely. None of the near-term results don't matter, to be quite honest, Caroline. We had good results. Some China vendors' payments and the China handset shipments doing better than expected, offsetting some of the weakness from the Apple. In fourth quarter, remember that they report royalties in arrears. So we're talking about December payments now. But the March quarter guidance is wider than expected, indicating that if Apple were to withhold payments, then revenue would be a little lighter and EPS would be a little lighter as well. So it's the ongoing effect of Apple that is going to have an impact on Qualcomm over the next 4 quarters and over the next 2 years. And this litigation is going to take 2 years, mind you. The bigger issue is not even Apple. Right? If Apple were to win against Qualcomm, what does that do to the Qualcomm royalty model? I think that is the crux of the question. If Apple were to get a better deal from Qualcomm, would that apply to all of its handset customers? That is a even bigger issue. And if Apple were to win outright in the court, saying that the value of Qualcomm's intellectual property ought to be based on the value of the chip and not on the value of the handset, as Qualcomm contends, then the royalty model is broken wide open.
Defunct. And what's fascinating, Anand, is you're talking up some of the risks here. The market seems to be shrugging it off. The shares are actually rising after hours. I've got a chart on my Bloomberg, #BTV7908 if you're a Bloomberg user. And it shows you that actually only once have we seen shares pop after earnings in the past few quarters. And that was back in the third quarter of 2016. Usually they fall come what may. So I really want to get to the bottom of the optimism here as to, yes, the numbers did beat, but is there optimism in China in terms of the growth? Is there perhaps optimism elsewhere that is amidst the clouds?
Look, this is a near-term relief rally. I think the cloud overhang on Qualcomm was pretty dark for a substantial period of time, and the rhetoric that was coming out, mostly one-sided from Apple, was pretty sharp. That said, none of this has changed. I mean, just because they printed this one particular quarter that were slightly better than anticipated in a quarter that didn't really have the full Apple detriment, we shouldn't take our eye off the ball with respect to the Apple litigation. That is far and away the most important thing on the Qualcomm story in the near and intermediate term, in our view.
You're right, actually, if you're digging into the Bloomberg and showing how the price has reacted over the past few months. A big tumble in Qualcomm shares happened in January when we first learned of these ongoing regulatory issues. Indeed, it's FTC, European Commission. We've seen fines coming from Korea. What about capital return plans there? Are there any ways in which they can keep the shareholder a little bit happy, maybe pump up the share price from where we see it at 52 spots?
Sure. So the capital return story is going to aid them some. Most of their cash is overseas, so any sort of corporate tax changes or repatriation tax policy changes would help them substantially. So those are two areas where they can make some hay. Also, the NXPI deal is still on track to be closed by the end of this year. That could change the optics of the company from a revenue and an EPS perspective, and change the revenue exposure, reduce it a little bit towards the handset market and increase it towards the auto market where NXP is substantially exposed. All of these things are very nice, but again, I want to come back to the royalty model only because even though the revenues are lower in that area relative to the NXPI revenues or relative to Qualcomm's own chip revenues, the margin that the royalty business carries is upwards of 90%. It's upwards of 90%. So the EPS impact as a result of $1 of royalty income is substantially bigger than anything else. So unfortunately, as much as they would like to change the optics, I think that the most critical issue is unfortunately the Apple litigation. Now, Qualcomm's seen this before. This is not an unheard of story for Qualcomm. They've done this with Nokia, they've done this with Samsung, and there is precedent for them to have won through the courts and in settlement of deals. The question is, will they have the same result with Apple?
The question is, how long will this relief rally last? Anand Srinivasan, wonderful perspective from you. Thank you very much. Bloomberg Intelligence joining us there. Now, another company out with earnings. This one, eBay, first quarter profit was 49 cents per share on revenue of $2.22 billion, just surpassing analyst expectations. But it gave a dimmer outlook in the current quarter it's trading in as it struggles with its turnaround. The e-commerce site gained 2 million active buyers in the past quarter and is up against an industry dominated, though, by Amazon. Check in on my Bloomberg because we'll see that the shares have been pretty volatile in after-hours trading for eBay. Currently trading down 1 percentage point. They did just creep above the seawater level, but it's been as low as off as 3 percentage points at one point. So trying to digest eBay. Now coming up, the life of an Apple supplier is about to get tougher. Details on the company's expansion of its design of components next. This is Bloomberg. Now, in Wednesday's trading, we saw a little bit of a mixed trading action from the major averages, but there was one big laggard of the day. Let's go to Bloomberg News stocks reporter Abigail Doolittle in New York with more, and we're talking Big Blue.
Indeed we are, Caroline. Well, to your point about the trading action for the major averages, it was mixed, choppy. The Dow and the S&P 500 both finished down. The Dow shedding more than 100 points for the worst day, or actually the lowest level since February. And behind that, IBM, just like you mentioned, Caroline, down about 5% on the day. Its worst day since June of last year during that big Brexit sell-off on June 24th. The company did miss revenue estimates by about 1%. And Bloomberg Intelligence analyst Anurag Rana, he said that much of this has to do with weakness in the legacy IT business, and he expects it to continue. So that's really what weighed on both the Dow and the S&P 500. Now, the NASDAQ finished slightly higher, in part because the NASDAQ does not have a weighting to IBM. But let's hop into the Bloomberg and see what else was happening for the NASDAQ. We did have some strength here. This is the MOV function, or movers. And on the right-hand side, the left-hand side with the green, we see Facebook up top, up nearly 1%, the biggest point boost for the NASDAQ on the day after M Science said that trends remain, quote, very strong. Right below Facebook, iSurge, or Intuitive Surgical, the surgical systems company, up more than 6%. Really a very strong day on a big beat for both the top and the bottom line. And Intuitive Surgical, Caroline, they also raised the view for procedure growth. So apparently investors like that, with that stock up more than 6% on the day.
Some interesting movers. I'm looking at how Asia was down. Europe was pretty flat on the day as well. But take us into chip equipment stocks in the US now, because if you're looking at the MRR function, I know a personal favorite amongst us all, it shows the individual member ranked returns for the day. The results seem to be driving some of the uptick here. ASML in Europe did very well. Lam Research is very strong first quarter in the US. Can you talk us through it?
Well, great point there, Caroline, because with that MRR function, or the move right beneath Intuitive Surgical, from a point standpoint, KLA 10 Core, Lam Research, and Applied Materials, these are all chip equipment companies. And Lam Research put up a monster quarter. That, according to one analyst, they beat both top and bottom line estimates. the 3D NAND business was very strong. But this sector, the chip sector and the SOX, has been weak in recent weeks. A little bit of a rebound because these chip equipment companies make the equipment that the chips companies use, so it's seen as a leading tell. But Dan Russo, a technical analyst over at Needham, he thinks that this is probably short-lived. He sees that SOX potentially dropping by 5% or more to 905. And speaking of technicals, let's take a look at another chart in the Bloomberg. This is G#7904, and this is of Qualcomm. So Qualcomm, the chip company, did report its second quarter after the bell, beat both top and bottom line estimates. But this stock has had a really rough year. This is a downtrend. That area in yellow is basically congestion. And right now, Caroline, it is breaking to the downside, suggesting that Qualcomm, despite a little pop in the after hours today, could in fact just drop further to the downside. And I know that Anand Srinivasan, another Bloomberg intelligence analyst, he was just talking about how earnings are just completely eclipsed by the bigger issues the company is facing. And this chart supports that Qualcomm could have a bumpy ride ahead.
Those bigger issues, of course, being all tied up with Apple and other particular litigation issues. Thank you so much, Bloomberg News stocks reporter Abigail Doolittle. Brilliant analysis as ever. And I just want to be digging into Apple a little bit more now, because earlier this month, the juggernaut ditched supplier Imagination Technologies. Now, well, other chip suppliers seem to be perhaps suffering the same fate. For years, Apple has developed its own processors, but more recently, the tech giant is expanding into areas that need special chips designed in-house. Creating these chips is just one more way for Apple to maintain leverage over suppliers. Joining us now to explain is Bloomberg Technologies' Alex Webb, who covers all things Apple. You've got a great story out on the Bloomberg and Bloomberg.com at the moment. And talk to us first about what sparked, perhaps, the initial wariness of their own suppliers, because there's a bit of M&A going on in that area.
I think we've actually got to clarify cause and effect here. Apple has been developing its chips for a decade or so. But what we have seen in the past 2 years is a huge wave of consolidation in the chip industry. Now, the fact that Apple has been developing its own chips has given it a certain amount of power, because of course, consolidation means there are fewer companies in the industry as they're bought by others, and therefore they have more price power themselves. More power to negotiate with Apple because there's less competition in the market. So Apple, because it's developing its own chips, therefore regains a certain amount of leverage and says, well, we can go with our own in-house solutions unless you give us better prices. For instance, that might be a tactic they used.
So talk to us about where they're starting to produce in-house, which specialities they're getting in on, and therefore who's most at risk here.
We've seen a number of companies have been identified by analysts. At this stage, it is purely speculation that people might be dropped, but the investor community is slightly wary about these kind of things. They've seen Dialog Semiconductor as a company which might be vulnerable because of a number of R&D locations that Apple is opening up in California and in Munich. Dialog has a big employee base in Germany, and so they've been taking a lot of employees from there. They've also highlighted Synaptics, who make some of the hardware which helps run your touchscreen on your iPhone. And another consideration is Cirrus Logic. That's perhaps less of a concern than the others, according to the analysis we've read, but they make audio drivers for our smartphones.
Interesting. Dialog Semiconductor actually trading higher in European market today. But it's an interesting story that's happening at the same time as we're seeing Samsung make more chips in-house. This has been perhaps a bit of a pressure on Qualcomm, which has come out with numbers. Is this something we're going to see across the board, or is this something Apple's just going to keep on using in its playbook?
It's actually something that Nokia did back in the day as they got richer and richer. And of course, how do you spend that money? Well, spending it on R&D is a good idea. In some ways, it's a question of going back into the supply chain and trying to make more money on that end. They've gone forward in terms of distribution. They have their own stores and everything. And so doing more of the fundamental technology in-house gives them a lot more control. The risk is, I think Apple's a long way from doing this because they have a huge amount of money and far more than Nokia did back in the day. But Nokia, some people said, started to miss out on some of the innovations coming out of the supplier community because they were concentrating on their own solutions.
Fascinating. We better get reading more of your story. Thank you very much indeed, Alex Webb, as ever, our Bloomberg technology reporter. Now we'll hear what Microsoft co-founder Bill Gates says about Brexit and how it could affect scientific research in the United Kingdom. That's next. And a feature we'd like to bring to your attention is our interactive TV function. You can find it at TV Go on the Bloomberg. You'll not only be able to watch us live, but also see previous interviews and dive into any of the securities or Bloomberg functions we talk about. And you can become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out, TV Go. This is Bloomberg. Now, celebrations for the 5th anniversary of the London Declaration on Neglected Tropical Diseases are underway in Geneva, Switzerland. The landmark agreement produced a roadmap for the control, elimination, and eradication of 10 of the world's 18 neglected tropical diseases by the end of the decade. Now, Bill Gates helped kick off the event. Bloomberg's Manus Cranney sat down with the Microsoft co-founder for an exclusive interview. Among other things, they discussed the impact of US taxes on innovation, the buzz over immigration, and the possible effects of Brexit. Take a listen.
Tax structures, you can't say they're unimportant, but the basic idea of what's going on, whether it's drug companies coming up with new drugs or new software, it's the potential for the innovation. And are you meeting very basic needs that people have to communicate and create and manage their business and things like that? So, California is a very high tax location, and yet Silicon Valley remains as a center of huge innovation, stronger today in terms of its share of the digital innovation than at any time in history. So, I'm not downplaying tax issues, but what CEOs in tech companies wake up thinking about every day is how they're going to use AI and where does their AI connect up to customer problems.
And you mentioned your meeting in terms of informing the president on the world and building his knowledge base. When you talk about tech companies, you obviously talk about the threat of an insular America, an America with more immigration rules. How big is the threat of an immigration change in the United States of America? Is it America insular rather than America first?
Well, America hasn't had an open door for immigration for
I've been trying to get a green card for a while.
A long time. We have a lot of complicated policies that have to do with bringing family members over, some skills-based programs like the H-1B, that if you can show you're filling a job that can otherwise be filled, that helps with the American economy, you can do that. There's an area of uncertainty. If you want to grow jobs, it's often bringing foreign talent in that's starting new companies or filling new roles, that is a net jobs accretive. People worry that you're just bringing in people and lowering wages. And so having systems that differentiate between the job substitution piece versus the building jobs around that unique talent, the government will probably try to do that harder. The fact that it's all evaluated in this framework of jobs and economic growth, that's fine. High skills immigration actually can meet that test. Educating somebody and having them leave the country where other jobs will be created around that person, isn't a great jobs move.
I'll finish with one of the most salient issues. An Irishman with 2 passports who's looking at Brexit, but you as a global technology man, how do you look at the UK, Bill? Do you look at it going, this is a long goodbye, or this is an opportunity for the UK? In terms of tech, we've done so much in the UK in terms of building tech excellence. What's the threat from Brexit as you look at your vantage point?
Well, the UK, whether it's for Microsoft, where they have a huge lab there that does amazing work right next to Cambridge, or for the foundation, where we have over $1 billion of active grants to institutions in the UK to help build new tools for us. After the United States, is by far the number 2 place with a huge distance to number 3. And so maintaining that scientific excellence, which sometimes involves foreign-born scientists coming in and joining teams there, and having the right type of R&D collaboration, which as part of the EU, the UK's been a huge net recipient of scientific R&D dollars. I've been very pleased that both the Chancellor and the Prime Minister have said scientific leadership, creating good jobs, having this strength that is really fantastic in the UK, that they're going to work to maintain that because it would be a huge loss to the world and the UK if that wasn't done. It can be done. They've made it a bit more complicated by not being part of the EU, and just the uncertainty of, okay, what will the rules be about people and R&D pooling and money like that. Some people are getting concerned about that. Our foundation, is going to be here 10 years from now, 20 years from now, so we can, be calm and take a key view. And I'm sure we'll get asked as these choices are being made, how do you keep that very strong momentum, whether it's up in Scotland where livestock stuff is just unbelievable, the traditional universities like Imperial, Oxford, London School. Anyway, the UK strength is there. I think they're being careful to make sure that they're not dropping off on that.
That was, of course, Microsoft co-founder Bill Gates and Manus Cranny, my colleague. Meanwhile, Alphabet is aiming to create a Google Maps for healthcare. Verily, Google's life sciences arm is launching a 4-year study called Project Baseline. The study is aimed at connecting the dots to why people transition from being generally healthy to becoming sick. The Silicon Valley-based company is working with partners including Duke University and Stanford Medicine to enroll 10,000 participants from diverse backgrounds at half a dozen study sites in California and North Carolina. Now coming up, it's day 2 of Facebook's F8 conference. Details on how the social media giant plans to help you hear through your skin. That's next. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. In France, one of the suspects arrested for allegedly plotting an attack days before the presidential election had been on the radar of Belgian officials. Belgium's federal prosecutor says the country had opened an investigation into the 23-year-old after his family alerted officials that he had been radicalized and possibly planned to go to Syria. United Nations Secretary General Antonio Guterres will attend meetings for the International Monetary Fund and World Bank in Washington later this week. Guterres will discuss financing for peace at the World Bank Friday and speak at the IMF's opening meeting Saturday. Fox News host Bill O'Reilly is leaving the cable news network in the wake of a sexual harassment scandal that caused dozens of advertisers to flee his top-rated show. 21st Century Fox announced his exit in a statement today, and then in a statement of his own, O'Reilly said, quote, "It is tremendously disheartening that we part ways due to completely unfounded claims, but will always look back at my time at Fox with great pride." Tucker Carlson, who currently hosts the 9 p.m. Eastern Hour on Fox, will now take over O'Reilly's 8 p.m. time slot. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg. Just after 5:30 p.m. Wednesday here in New York, 7:30 Thursday morning in Sydney, Bloomberg's Paul Allen joins us. He has a look at the markets. Paul, good morning.
Good morning, Elisa. Well, we already have ASX futures off 0.2%, so looking like another down day on the market here. Keep an eye on TPG Telecom, currently the most shorted stock on the ASX. Also watching iron ore. The price has been slipping steadily over the past month, up a little overnight, but over the month off about 30% now. That slide, however, has not been reflected in the Australian dollar, which continues to hover stubbornly around the 75 cents mark, and a lot of commentary coming through now that the Aussie probably needs to fall, and otherwise the country is going to be facing some headwinds. Iron ore, meanwhile, predicted to continue sliding in 2017 as Chinese plants plan to cut steel capacity. Elsewhere in the region, Nikkei futures currently looking mixed ahead of Japanese trade data for March. Those numbers expected to come in a little lower than the previous month. Trade seasonally adjusted, likely to shrink to 172 billion yen as those distortions from the Lunar New Year are ironed out. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
Bloomberg Technology, I'm Caroline Hyde. Now let's get back to our lead. Qualcomm continuing to gain after reporting earnings after the bell. Adjusted sales and profit topped analyst estimates, despite being in the midst of a court battle with Apple over high patent fees. The company's semiconductor unit was lifted by demand in new markets beyond the smartphones, such as automotive and connected devices. This helped to bolster sales in the second quarter. Now, Qualcomm CEO Steve Mollenkopf says that the company also did well in the Chinese phone market. Now, day 2 of Facebook's F8 conference is underway in San Jose, California. And the annual developers conference kicked off Tuesday, and with CEO Mark Zuckerberg detailing the company's plans to dive deep into augmented reality. Now, in day 2, the social media behemoth revealed it's working on building a brain-computer interface that will let you type with just your mind without invasive implants. Joining us now to discuss, Bloomberg Technology's Sarah Fryer, who is live calling from the F8 conference. So, mind-reading tech, Sarah, hearing through your skin, Sarah. Tell us more about some of these new, slightly more, perhaps crazy announcements.
Absolutely. So the second day of F8 is always the day where Facebook tries to blow you away with all of the crazy, innovative things they're thinking about. Is this going to be a product in the next year? Absolutely not. But the Building 8 lab, this lab that they started last year by hiring Regina Dugan from Google, this is a lab that is working on ways to try to not tether us so much to our phones in the future. So the next step of socializing may not require us to be so tethered to technology. And the first step for that really is to make it easier to communicate telepathically. And this is just one of the many things they're looking into. Zuckerberg has been fascinated with this kind of technology for years.
Fascinated with this. We also heard about new cameras. 360-degree cameras was something they unveiled perhaps with Samsung a little while ago, but they seem to be producing their own and handing them out free to anyone who wants one.
Yeah, every guest of the F8 conference got a little 360-degree camera that they can clip onto their phone. But beyond that, there's this kind of mega camera that Facebook has been designing. This improvement of the camera they unveiled last year. It looks like kind of like a black disco ball or a bug eye. And what it does is it allows you to take 360-degree film, and then when somebody watches it, they can move from the spot where they're in and still get a sense of the film, as opposed to most 360-degree photos we see today where you have to be in a stationary point. So they see this as a big technological advancement.
And Sarah, lastly, there was a long-term vision being spelt out for AR, and indeed, perhaps the cooler way to look. They seem to want to make us want to wear these glasses that they might eventually give us.
Right. So not the age of the Google Glass clips it onto your head and everyone looks like a dork. They think that AR will not be widely applicable until you're wearing it in a way that is socially acceptable. And there's nothing that's going to be socially acceptable if you can't see the eyes of the person that you're talking to. So the lenses of these glasses of the future, which have not been developed yet, must be clear. So Facebook's giving us a little bit more insight into what their vision of the ideal future starts to look like in the 10-year, maybe even 20-year time frame.
Fascinating. We're going to be digging into augmented reality much more next. Bloomberg Technology reporter Sarah Fryer, fantastic to have you with us. Thank you. And sticking with Facebook, the social media giant's bet on augmented reality remains a major highlight of the conference, as we discussed. Joining us now is Sunny Dillon, partner at Signia Venture Partners, where he focuses in on seed investments in virtual and augmented reality. And Sunny, what an unveiling we've seen coming from Facebook. They want them to look cool if you're going to be buying these glasses going forward in 10 years or so. But also talk to us about the opening of the ecosystem here, because this is getting developers involved.
Yeah, so I think that the common belief for a long time was they were copying elements of Snapchat from a augmented reality perspective with the filters, the masks, the lenses. Facebook famously bought a company called Masquerade about a year and a half ago that was all about putting the augmented reality masks on its own standalone app. Facebook quietly bought them. I think now we're starting to see some of that technology opened up. So scale and first to market is not necessarily the same thing as the 800-pound gorilla coming to market. I think that's really what's happening with Facebook now. They'll offer you the computer vision, the depth sensing, the simultaneous localization and mapping, the SLAM depth sensing technology, for free to most developers out there so that they can build their masks and their filters and their augmented reality apps on top of the Facebook platform. Facebook essentially ends up becoming the app store for augmented reality brand-sponsored advertising.
Sort of fascinating. So in a way, does Snapchat remain a legitimate competitor in the AR space?
So I think that it was, turning down the $3 billion offer, Evan Spiegel, he turned down the $3 billion offer, and then, now he's $25 billion. So a nice kick on valuation.
Who wins, yeah.
I think that Gen Z and millennials are still, you're still going to have a very young user base on Snapchat. It's very novelty driven. It does have quite a solid AR roadmap ahead of it from a technology perspective. But I think that Facebook really opening up this platform to third-party developers is really key, because it means that Facebook doesn't have to develop the killer AR app itself.
Yeah.
It means that one of the many artists or developers out there will do so. Whereas Snapchat was, charging up to $800,000 a day for, I think there was an Ed Sheeran lens or something during the promotion of his album that was targeted very heavily within certain areas for a limited period of time. Now the idea is, if you open this up, you give a lot of the tech away for free, you kind of are attracting, you're raising a flag and saying, come build with us. We want the data, we want you hanging out here. Anywhere that you're being social, we want you to do that with Facebook.
Come build with us, come buy with us. I mean,
Exactly.
You just mentioned Ed Sheeran there and the amount that was being spent perhaps by brands at Snapchat. This offers a whole plethora of way companies can now spend with Facebook.
Yeah, so I think that other elements that they've announced at F8 are largely focused on the bots platform, on the Messenger platform that they have. So I think that they have a multifaceted approach of what they can offer you as a brand now. Come engage with your audience on Facebook through Messenger with our bots. Infiltrate various social communications between various groups of friends by inserting a bot that's just organic to that conversation. Come to our traditional Facebook app install network, or now come to get this entirely new to monetize real estate, which is augmented reality. Essentially graffiti, tags, overlays, all this kind of stuff is them learning more about what you're doing in the real world and how can they better target you with brand dollars accordingly.
And augmented reality is something that they've now been pushing into, potentially copying Snapchat to a certain extent. But they've always been there front and centre with virtual reality after the purchase of Oculus. Can you talk to us a little bit about those announcements as well?
Yeah, for sure. So I think with virtual reality, Oculus is an amazing piece of technology, but it was certainly a missed market opportunity. It was first to market. Facebook planting the $2 billion or $3 billion price tag as it became public, won that company, kind of got the venture capitalists all excited. We all started investing in VR and AR. It's the I think the third or the fourth coming of the technology since the 60s. I think that they recently announced something called Spaces at F8, which is basically a way of 3D avatars like us, avatars of ourselves, being able to communicate, watch content together, share photos, have a laugh, be able to wave at each other, etc. So real presence. It's pretty cool. I tried it yesterday. It's live now on the Oculus Rift headsets. What's interesting though is that they want to go cross-platform, so they're not tying themselves to their own hardware, much in the way that Apple often does with actually owning the OS layer on its smartphone. So I think that VR is very exciting for certain applications like gaming, certain types of cinematic storytelling. But I think AR really is the category killer, because that disrupts the world the same way that your smartphone did in 2008.
Sunny, I always learn something new with you coming on. Thank you very much indeed. Of course, Sunny Dillon, Signia Venture Partners. Now, a setback for Hyperloop. The company is delaying and scaling back the first full test of its prototype. This according to the Wall Street Journal. Hyperloop had plans to hold a public test of a prototype in late spring, several months past its original estimates. We spoke to CEO Rob Lloyd earlier this month when he was optimistic about the future.
We're very excited that within the next couple of months, we're going to show the world that Hyperloop is real, and we're getting really close, and obviously we're pretty excited.
Coming up, major tech firms are publicly speaking out about the need for diversity, but the numbers show little change. We'll discuss where things stand right now and what companies are doing to make their workforce more diverse. This is Bloomberg. Now, over Over the past few years, companies have grown more transparent about diversity. They've poured millions into initiatives with the aim of recruiting and retaining more women and minorities. But much of what they've done just hasn't worked. For example, Apple reported that in 2016, 32% of its employees globally were female. But look back to the last 2 years since the company started reporting these stats. Well, the increase in female employees has been but incremental. So where do things stand now for tech firms, big and small, and what's being done to fix it? That was the topic of this week's Game Plan podcast. The host, Bloomberg News reporter Rebecca Greenfield, joins us now from New York, and with me in San Francisco, Ellen Hewitt, who has been covering diversity for Bloomberg Technology for the past few months and years. Let's first of all ask you, Ellen, really on some of the statistics here, because give us a sense of just how little things have changed.
I think you look at these numbers year over year, and we see companies releasing their numbers year over year, and you see changes of 1% here or there, and companies are really trying to slice and dice things in a way that makes them look good, so they often will now start to just show percentages of the new hires that they've made in the last year, like what percentage of them were women. Because the truth is, if you're a company as large as, say, Alphabet, 60,000 employees, if you could hire women and underrepresented minorities all day long, and you wouldn't see a ton of change in the percentages of the company. So it is, I think, been interesting to see how companies react to showing the same or very similar statistics year after year.
Still more work to do. Rebecca, can you tell us some of the inside facts of what they are trying to do, perhaps more innovative ways of bringing in ethnic minorities, more females, and actually holding on to that talent among the companies you've spoken to?
So something that was pretty in vogue in the past few years has been this unconscious bias training. So it's training where people will come in and tell you how we're all biased in the workplace and it's not your fault, but we all have these biases. And that was supposed to help these companies solve these problems. But it turns out that unconscious bias training, especially on its own, doesn't really work. It makes people feel very on the defensive, even though it's not someone saying like, oh no, you're a bad person. But it does make people feel like they're called out. And then also research has shown that bringing up biases in the workplace kind of makes people accept them. So that training, which a lot of companies have put a lot of money in, aren't working. But there are some things, more technological things that these companies are hoping will work. So new hiring techniques or recruiting techniques that they hope to get rid of some of the biases that happen when people are picking other people to work at their companies.
And perhaps target a little bit more. I was listening to a podcast, for example, just saying maybe change the language, and that indeed can help in many ways to bring women on board, for example. What about, Ellen, the solutions that you've seen work, and which companies are sort of stand out here in Silicon Valley that are really trying to make inroads and seem to be making it work?
Well, seeming to make it work is hard, but there are definitely companies that are public about and vocal about what they've been trying to do. So, last year or maybe 2 years ago, we had Facebook put out videos of what was kind of their unconscious bias training modules. They had these videos that they were really encouraging other companies to watch them and try to figure out how they could implement them at their own companies. And echoing what Rebecca was saying, it is interesting to see how many companies really want to just check the box of like, oh yeah, we did unconscious bias training. Like, we have this new software that we use in our hiring process that's supposed to eliminate bias, and yet it's really hard to know whether they actually work. And I think many companies jump in to wanting to implement these without actually testing, what the effects might be.
We're just looking at those previous statistics, just showing how few Black and Latinos do work, particularly in technology. Rebecca, is there any area of hope and optimism where you talked to some of the areas, the technology-focused areas of new hirings and the way in which it could be working? Are there any standouts that you've heard going through your podcast that you think there's opportunity to scale?
Well, like I mentioned, hiring is a big place where these companies, I think, are hoping to move the needle. As Ellen mentioned, it's hard to know what exactly works, but there are companies, for example, it starts at the very beginning of the process. So companies that will write jobs listings that will appeal to more diverse candidates. They found that certain words, for example, might appeal to men over women or certain races over others. And then they'll have software that reads resumes so that the person reading the resumes, their bias doesn't come in. And then you go down from there. So I think the new move, if you're really trying to fix this, is kind of a holistic approach that's from hiring until throughout the entire employee life cycle at the company.
I'm fascinated to see which geographies seem to be leading the way as well. Wonderful to have you both on. I think we need to discuss it much more. Thank you very much indeed, Bloomberg Technology startups reporter Ellen Hewitt and Bloomberg Game Plan podcast host Rebecca Greenfield, live from New York from us. And you can hear new episodes of Game Plan podcast every Wednesday on the Bloomberg at NI Podcast, or go to your iTunes, download it, I dare you. And be sure to catch our conversation on diversity tomorrow with Ellen Powell, Chief Diversity and Inclusion Officer at the Kapoor Center, and Anita Hill, Professor of Social Policy, Law and Women's Studies at Brandeis University. That's on Bloomberg Technology this Thursday. Coming up, Bloomberg gets its hands on a $400 juicer that's raised millions from VC firms, but it now seems it's feeling the squeeze. We'll explain next. And a programming note for you coming up this Thursday on Bloomberg Television, an exclusive interview with Dallas Fed President Robert Kaplan. You can catch that conversation at 7:30 a.m. Eastern. This is Bloomberg. Now, US-based juice machine maker Juicero raised $120 million by convincing venture capitalists it could create the Tesla of juicers. Now, Bloomberg got its hands on the machine to see if the $400 price tag is really worth it.
This is the Juicero. It's a cold-pressed juicer made by Juicero, a startup based in San Francisco. When the machine first launched, it cost $699. In January, the price dropped to $399. It makes juice by squeezing these packs of cut-up fruits and vegetables. Juicero says that you need this super-powered press, which can squeeze with up to 4 tons of force to get the juice out of their packs. But we decided to give them a squeeze test of our own. And after 2 minutes of squeezing, no expensive juice machine needed.
That was the voice of Bloomberg's Ellen Hewitt, who wrote the story which is gaining major traction online and on the Bloomberg. Here to dig into it a bit more, Bloomberg Technology's Olivia Zaleski, who co-authored the piece with Ellen, joining us live from New York. Fantastic piece, fantastic reaction. Just tell us that this was really backed by some standout VCs. They're perhaps a little bit embarrassed.
Huge venture capital funds invested in this company. We have Thrive, which is Jared Kushner's company. We have Kleiner Perkins, Google Ventures, all putting in about $120 million into Juicero.
And has there been any response in terms of how Juicero is reacting to this? Because this is such a punchy price tag. Does it admit that perhaps you don't really need this machine?
Well, so one investor went on the record and did say that he absolutely figured out on his own that the bags could be squeezed. But our understanding from speaking with sources at the company and investors in the company is that it's an issue that has not been broached or discussed. And perhaps the company doesn't even see it as an issue. They wouldn't go on the record with us.
But the company also has, a significant background in terms of design. It was meant to be a Tesla for juicers.
Yes, they did say that this machine had 400 parts, several gears, a scanner, a microprocessor, giving its high price tag. Originally, the machine cost about $700. The price dropped to about $400 in January. And the company really wants to be considered an innovative tech leader. Food tech is a huge topic right now in Silicon Valley. A lot of venture capital funds are pouring in money into companies like Impossible Foods and Hampton Creek. And Juicero is one of them that's really caught the eye of a lot of firms here in San Francisco.
Maybe catching their eyes of a lot of firms and users for all the wrong reasons. Bloomberg's Olivia Zaleski, great piece by you and Ellen, and I urge our viewers to go and watch it go and watch the video and indeed go and read the story in depth on Bloomberg.com. Now that does it for this edition of Bloomberg Technology. Remember, all episodes are now live streaming on Twitter. Check us out, it's at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. right here in San Francisco. That's all for now. This is Bloomberg.